Today, we're tackling one of the trickiest money challenges out there: how to budget when your income is irregular. That means freelancers, gig workers, commission earners, seasonal workers, small business owners, anyone whose paycheck isn't the same flat number every 2 weeks. By the end, you'll have a simple system that turns a bumpy, unpredictable income into something that finally feels steady. And you are not alone in this. Recent estimates suggest more than 60 million Americans, roughly a third of the U.S. workforce, do some kind of freelance or independent work. So this is a completely normal way to earn a living. It just needs a different kind of budget. Okay, so let's start with why the usual budgeting tips don't work here. Most of them quietly assume you already know what's coming in. Spend this much on rent, this much on food. That's easy when your paycheck is the same every month. But when your income jumps around, a fixed plan falls apart the first time you hit a slow month. In simple words, you can't build a steady plan on top of an unsteady number. So we're going to flip the whole approach around. Here's the big idea, and it's the heart of everything today. Instead of letting your spending bounce up and down along with your income, you're going to pay yourself a steady, predictable salary, even though your business income is anything but steady. Think of it like this. Imagine a bucket with a small hole near the bottom. Money pours into the top in big, uneven splashes, a little this week, a lot next week. But out of that little hole at the bottom, water drips out at a slow, even, steady pace. Your job is to be that bucket. The messy income goes in the top. A calm, fixed paycheck drips out the bottom into your everyday life. The bucket absorbs the chaos, so your daily spending doesn't have to. Let's build that system step by step. Step 1. Find your bare bones number. This is the most important number you'll calculate today, so take your time with it. Your bare bones number is the absolute minimum you need to survive 1 month. Just the essentials: rent or mortgage, utilities, basic groceries, insurance, minimum debt payments, transportation to actually do your work. That's it. No restaurants, no streaming extras, no shopping. Add those essentials up and you've got your survival number. Let's say, for our example, it comes out to $2,000 a month. Knowing this number is powerful because even in your worst month, this is the target you must hit. Everything above it is breathing room. Step 2. Separate your money. This is where the real magic happens, and it's simpler than it sounds. Think in terms of separate accounts, or at least separate jobs for your money. At a minimum, you want 3. 1. A holding account, where every dollar you earn lands first. 2. A checking account, your everyday spending account, the one you actually live out of. And 3. A tax account, which we'll get to in a second because for freelancers, taxes are the thing almost everyone forgets. Step 3. Pay yourself that steady salary. Once your income lands in the holding account, you don't spend from there. Instead, on the same day each month, say the 1st, you transfer one fixed amount into your checking account. That transfer is your paycheck. How much? Start with your bare bones number, and if your savings allow it, a little more. The holding account fills up during the good months and quietly cushions the slow ones, so the amount you pay yourself stays the same no matter what. That, right there, is how you turn a wild income into a calm one. Step 4, and this one keeps you out of real trouble: taxes. Here is where many beginners get caught off guard. When you're an employee, your boss quietly takes taxes out of every check for you. When you work for yourself, nobody does that. It's all on you. And freelancers owe something extra called self-employment tax, which covers your Social Security and Medicare. As of 2026, that self-employment tax is 15.3% of your net earnings, and that's before regular income tax even gets added on top. So here's the simple rule. Every single time you get paid, immediately move a chunk into your tax account and pretend it doesn't exist. A common starting guideline is to set aside somewhere around 25 to 30%, though your exact number depends on how much you earn and where you live. The IRS also generally expects you to pay your taxes 4 times a year, not just once every April. For 2026, those quarterly due dates are April 15th, June 15th, September 15th, and January 15th of 2027. As a rule of thumb, if you expect to owe at least $1,000 for the year, those quarterly payments apply to you. Put those dates in your phone right now. Let me put the whole thing together with a quick, realistic example. Say you're a freelance designer. In January, a big project pays you $6,000. The old you might have celebrated and started spending like every month would look that good. The new you does something different. First, off the top, you move 30%, $1,800, straight into your tax account. Gone. Untouchable. That leaves $4,200. Then you pay yourself your steady salary, let's say $2,500, into checking. And the remaining $1,700? It just stays in your holding account as a cushion. Then February rolls around and you only earn $1,000. But there's no panic. You set aside your taxes on that and you still pay yourself the exact same $2,500 salary because January's leftover cushion is sitting right there to cover the gap. Same paycheck, 2 wildly different months. That is the whole point. Now, before your buffer is fully built, your first savings goal is simple. Get that holding account to hold 1 full month of your salary ahead of time. Once you've got that, keep going until you've built a proper emergency fund. For most people, that's 3 to 6 months of expenses. And since freelance income swings more, leaning toward the 6-month side gives you real peace of mind. This matters more than you might think. Surveys have found that a large majority of gig and freelance workers would struggle to cover a surprise $1,000 expense. Your buffer is exactly what keeps a flat tire or a slow month from turning into a crisis. Now let's talk about the common mistakes, because dodging these will save you so much stress. The first one, treating a great month like it's your new normal. One amazing month is not a raise, it's a cushion. Lifestyle creep, where you slowly spend more as you earn more, is the fastest way to get squeezed the moment a slow month shows up. The second mistake, forgetting about taxes and spending the full amount that hits your account. That money was never entirely yours. A piece of it always belonged to the tax bill, and spending it now just means borrowing stress from future you. The third, keeping no buffer at all. If every dollar that comes in goes right back out, then one slow week instantly becomes an emergency. The buffer is the whole thing that lets you sleep at night. And the fourth, building your budget around your best month instead of an average or even a low one. Always plan using a conservative number, not your dream number. So what should you actually do this week? Let's keep it simple. First, sit down and calculate your bare bones number, just the essentials added up. Second, open a separate savings account. Most banks let you do this for free in a few minutes, and label it taxes. Third, look back at your last 3 months of income, add them up, and divide by 3 to find your true average, because that average is your real reality, and it's often lower than we'd like to guess. And fourth, going forward, the moment any payment lands, move your tax percentage into that account before you touch anything else. Quick recap. Find your bare bones survival number. Funnel all your income into one holding account. Then pay yourself a steady monthly salary out of it. And always, always set aside money for taxes the second you get paid. One important note, I'm a teacher here, not your accountant. This video is for education only, and tax rules can get personal fast. So for your specific situation, it's always worth checking the official IRS website or talking with a qualified tax professional. If this helped things click, Go ahead and give it a like so more freelancers can find it, and subscribe to hang out with us for the next lesson. Managing an irregular income is a skill, and like any skill, it gets easier every single time you practice. I'll see you in the next one.